stock didn't look like it was moving in the pre-market on that news, but it does seem like it was in line. Given the headwinds of 2018, 2019 is a better situation.
Well, you're right, Andrew. Last year, global equities were down 13%. Global equities came back about 11% throughout the quarter. And so absolutely the circumstances are quite different. We grew our total asset base by 9%. So we grew over $525 billion in assets. $65 billion was organic. The rest of it was market movement. And so we're back over $6.5 trillion. But the mix of AUM was quite extraordinary. We had 80 billion of inflows in fixed income. So you saw many people putting money to work in fixed income. But global equities, you saw as an industry, huge outflows. So the trends have not really changed. But, you know, for us, we had, as I said, 65 billion in net inflows. We saw extraordinary new wins in our technology business. We had a record quarter of raising $6 billion of illiquid alternatives in the quarter. Right. And so we saw money being put to work, but I would not say investors were just jumping in all in. And the marketplace, with the market rally as large as it is, I would clearly tell you at this moment, most investors are exposed by being underinvested at this time.
So you think they're under? Okay, so two questions. One is, to the extent you're pulling new money in, where are you pulling the new money in from?
I would say it's you know, the one thing I could talk about with a little more public is our iShares franchise, where we had 32 billion of inflows, and it was pretty concentrated in Europe and the U.S. About 17 billion in the U.S. and 15 billion in Europe. Very little out of Asia in the first quarter. But in our institutional business, we saw it from Asia, we saw it from the Middle East. So we're seeing some money to be put to work, money from cash to fixed income. We're not seeing money being put to work rushing into equities.
What are the trends that you're seeing in terms of flows into the core iShares versus the mutual funds, to give us an idea of your fees and some pressure on fees?
Well, for the quarter, our fees actually went up 0.2 of a basis point. So we went from 18 average basis points to 18.2. So overall, I'm talking about the whole franchise. The whole franchise, and some of that is because we're now winning more and more in the alt space. So that's certainly helping. And we did see a reversal of 2018 in high yield. In the iShares business, it was a pretty good mix of both core, which is a lower fee, versus the non-core, which is more institutional and more for liquid markets, where we have options associated with some of those ETFs. And so we have not seen any real pressure in terms of a huge shift into only core. So we're seeing a pretty good mixture of both core and non-core.
You just commented before you answered that question that you believe people were underinvested.
Globally, yeah.
Globally.
Yeah.
But make the case why you think that. And are you saying that in terms of the equity market, or are you saying that just broadly?
Broadly, and you know, and some people are going to continue.
Is that a market call?
That is a market call, yes. If that's what you're asking for, yes. I think we have a risk of a melt up, not a meltdown here. Despite where the markets are in equities, we have not seen money being put to work. We have record amounts of money in cash. We still see outflows in retail in equities. We still see outflows institutional. I'm talking about an industry now. And so, and when we have something that's unique or special, whether it's in our infrastructure business or something else, the demand for these assets are extraordinary. So, and in fact, we have clients almost arguing with us they want a bigger allocation.
But explain why you're bullish, because you've come on this program many a times when you have been bearish or at least lukewarm on where things are.
And it's just because I think we're struggling in this time, especially now with central banks who are, if anything, more dovish than ever. They're not changing their behaviors related to QE anymore. There is a shortage of good assets.
We've had a couple of people in recent weeks, like Katie Stockton. Yep. We had someone else recently that said that this huge move from January to March has been met with very little excitement. by investors, and you've got the, you would know with trillions of dollars under management, and you're not seeing the it's all in previous tops. You've probably seen a lot more excitement, haven't you?
Right. Well, we're seeing huge excitement in fixed income. So many, Well, many people thought we were going to be in a period of rising rates.
Right.
We were not, and we saw huge underinvestment, and people had to rush in to invest in fixed income. We have not seen that in equities. That's what I'm trying to say. We have not seen what I would say that I missed that, and I'm running in.